Hi, this is Dr. Charlie Peterson. I'm the author of Dude, Where's My Profit? The Accounting Finally Makes Sense course. Today I want to talk about double entry accounting. Actually, double entry accounting is very simple if you can see it by using the accounts. Now we have set up the backwards C ledger. Now if you're not familiar with this ledger, you want to go back and view some of my other videos. But what I've done is I've set up a backwards C ledger, which includes the 5 general categories of accounts: asset, liability, owner's equity, revenue, and expense. And I've included some of the specific accounts. Just to remind you, assets and expenses increase on the left side, liability, owner's equity, and revenue increase on the right side. Now, the accounting cycle process, the way I present it, has 5 steps. What we're going to do is look at step number 1, entering the transactions in the ledger and balance the accounts using double entry accounting. Step number 2, then we prepare the income statement. Step number 3, we add net income to retained earnings. Step number 4, prepare the balance sheet. And step number 5, we output the financial statements. So we're going to record a series of transactions, and we're going to complete the ledger by balancing the accounts. Now, double entry accounting is best to use when analyzing a transaction for instructions. We'll use the example of you go to Staples and you buy $100 worth of supplies on account. All right? You want to identify the specific accounts involved, not the asset, liability, owner's equity, revenue, and expense, but the specific accounts. The specific accounts in this case happen to be supplies and cash. Now, instruction number 2, determine increases and or decreases. Now, there's no pattern with increases or decreases. In some transactions, all the numbers will increase, others all decrease, and others, some will increase and some will decrease. Now, using instruction 1 and 2, you can then enter the numbers into the appropriate accounts, which I'm going to show you very shortly. Instruction number 4, check to see that the sum of the lefts equal the sum of the rights, or debits equal credits. That's the important pattern to check. In every transaction, lefts and rights are equal, debits and credits are equal. And debit means left, credit means right. Now, I've selected a page from my Dude book, one of the simulation exercises, and this is one of 9 exercises that you can experience, and they get generally more complex as you go along, but very, very simple ways to understand these. Now, I have a series of transactions. Actually, there's a total of 8 transactions we're going to record, and I'm going to talk your way through this. Now, some of the transactions are on the other page, so I'm just going to insert those when we're ready to use them. So, are you ready to begin? All right, transaction number 1. You invest $400 cash into the business. Okay? Step number 1, or instruction number 1, identify the specific accounts. Well, clearly cash is one of them, and because it represents your investment in the business, we're going to call it capital invested. All right? Instruction number 2, determine increases and or decreases. The business cash increases. What that simply means is your personal cash decreases, but we're only recording business transactions. So business cash increases, and so does the amount of your investment. All right, ready for instruction number 3. Enter the numbers into their appropriate locations in the T accounts, which I'll show you very shortly. And then you check to make sure lefts and rights, or debits and credits, are equal. Alrighty? So let's start out with the first transaction. You invest $400 cash into the business. All right? The specific accounts are cash and capital invested. Now we have to determine increases and or decreases. The business cash has increased as the amount of your investment. So they're both increasing. Now we're ready to put the numbers into the T accounts. Cash is an asset. It increases on the left or debit side. Capital invested is an owner's equity account. it increases on the right or credit side. Now you want to make sure and check that lefts and rights are equal, which is the case here. All right, so that takes care of the first one. All right, now the next transaction, earn service revenue for cash, $600. Assume you go in and paint someone's living room, and when the job is all done, the customer gives you $600. All right, the specific accounts, in this case, cash and service revenue. You've just provided a service. And they're both increasing. Now we're ready to enter the numbers into the T accounts. Cash is an asset. It increases on the left side. Service revenue is a revenue account. It increases on the right side. And again, check lefts and rights are equal. All right, I want to switch in these remaining transactions here. Okay, now transaction number 3, you go to the bank and you borrow $300 and you sign a promissory note payable. All right, the two accounts involved are cash, obviously, because you're going to walk out of the bank with more cash, but you give the note payable to the bank, so that's the second specific account. Cash is increasing because you walk out of the bank with the cash. Your note payable is increasing because now you owe more. Now we're ready to put the numbers in the T accounts. Cash is an asset account. It goes into the increased side of cash. Note payable is a liability account. It goes on the increased side for the liability. All right, number 4, pay the rent for the month, $450 cash. Now, the two accounts involved are rent expense and cash. Rent expense is increasing. See, remember, when you're paying an expense, the expense increases. But what does decrease is the cash. All right, so let's put the numbers into the T accounts. Rent expense increases on the left side, or debit side. And we're going to enter it right above the balance line here, $450 on the decrease side for cash. And then again, check that lefts and rights are equal, which is the case. Next transaction, we buy equipment costing $350 cash. Well, our two accounts involved are equipment and cash. And equipment is increasing, but cash is decreasing. Equipment increases as a left or a debit. Cash decreases as a right or a credit. Takes care of that one. We place an ad in the newspaper and pay cash, $50. All right, the two accounts involved are ad expense and cash. And they're both increasing. Remember, when you pay cash is decreasing, but when you pay an expense, it increases. So my ad expense increases by $50, and my cash decreases by $50. And then number 7, pay $100 cash on the note payable. So you're going to go to the bank and you're going to pay back some of the note. All right. Notes payable is one of the accounts, and so is cash. Notes payable actually decreases, so we're going to enter that on the left side, $100. Cash also decreases. We're going to enter that on the right side. Here's an example of a transaction where there are two decreases together. Finally, we purchase supplies for cash, $25. All right, supplies and cash, obviously. Supplies increase by $25. Cash decreases by $25. Now you've recorded all the transactions, and what we have yet to do is to balance the accounts. Wherever there's more than one number in the account, as with cash, extend this line a little bit, cash and note payable, we have to draw a balance line in under the last number in either column. We add up the increases, we subtract the decreases, and it comes out to be $325. Now, it's going to be on the increase side of the account, so you want to make sure it appears over there, $325. And we're going to put a B beside it to indicate a balance. Very important to put that balance in. Now let's go to notes payable. Draw our balance line. We obviously can see that the note is now $200. So on the increase side of the account, we write 200, and we put a B beside it for a balance. Now all the other accounts have a single number in them, and there are actually two ways that you can handle these. Number one, you can just put a B beside it because that becomes the balance. Or you may draw the balance line, bring it down below, B 350. Either one is correct. So I'm just going to go in and put all the B's in. All right, so now you have recorded 8 transactions using double entry accounting. Remember, lefts and rights always have to be equal, because that's one thing you want to check every time. Please get back with me with any comments or suggestions. Just go to my website, www.dudewhere'smyprofit.com, and thanks for viewing.